Hi, my name is Cathy, Sabater, mortgage planner and proud veteran. I'm here with Mike Harris.
Hi, everyone. This is Mike Harris, a proud retired Navy veteran and your local real estate professional.
What are we going to talk about today? Buyers getting off the fence. I understand we're here, we're in a pandemic, but Mike, weren't people on the fence before all of this happened?
They were 100%.
And do you think any of the reasons have changed since then?
There may be a couple new reasons, but the prevalent reasons still remain.
Okay, so why do you think people were on the fence before this pandemic, and what's happening now in regards to the pandemic?
I think people, what I've been seeing is, and this is from conversations that I've had with people, is they're waiting for the market to crash.
Okay.
That's one of the reasons. And the other is the home prices here in California are a little bit more expensive than what they're used to paying from their home states, excuse me.
Okay. Anything else?
Well, you also have the pandemic, COVID-19 going on. So that's kind of slowed down people's motivation to buy right now. I think everyone's just waiting for this to for the country to open back up, or their city, and then make a move then.
Well, let's break it down. Okay. Break it down. So let's break it down with the pandemic. So for those families, unfortunately, who are health-wise and financially affected, our heart goes out with them. But for those individuals who are still maintaining a certain lifestyle, we do understand that the uncertainty of the pandemic. But at the end, you're either going to pay rent or you pay a mortgage, right? Yeah. The difference between it is that if you're paying rent, what do you think the benefit is of rent versus being a homeowner, Mike?
Well, the benefit for you being a tenant versus being a homeowner is you don't have to take care of the maintenance costs of maintaining that home or condominium. Outside of that, I don't see very many benefits.
Okay. And then I would add is if you are renting, the other downfall is you have to wait for your landlord, hopefully depending on what kind of service you get from them, to manage it accordingly, right? The other thing as far as being a renter is your rent it increases every year or whatever the case may be based on the scenario. Where if you have a mortgage, if you're a homeowner, the one thing that is increasing in this market right now is your equity. So what is equity, Mike, if you mind explaining that to us?
Equity is the difference in the balance that you owe on your mortgage. It's the difference in that balance and what your home is worth.
Right. So for those individuals right now, there are, believe it or not, because there's not a lot of inventory, and even though we're in this pandemic, home values are maintaining its value, and if not moving up because there's not enough inventory, right?
Correct.
So that'll take care of the rent versus being a homeowner. You mentioned the fact about the cost of a home here. We had affordability before the pandemic as well. And so now with affordability, what can we do to assist those families?
Well, I think the first thing you can do is just verify that you can't afford it, because a lot of people believe that they can't, and they actually can. But in order to do that, you can speak with you, Cathy, and get pre-approved, and you'll know within a day or two.
That's right. So basically what happens is I'm a mortgage planner because we're going to plan your mortgage, right? So 680 is the old number because now with the pandemic, banks want more security, right? They'd rather you be in the 700s. So if you're not in the 700s, we're going to help you. Mike and I are going to help you with, hey, let's develop a plan to help you get to where you need to be. So if you're at 680, we'll help you get to 700. But get it right, you can still purchase a home at 680, right? You can. But it makes it easier for you just for the planning purposes, right? Then the other thing is we'll help with your budget, right? Because you mentioned some people think that they can't afford it. So we have a process that we do in regards to the budget to ensure that, hey, we want you to feel comfortable, because one of the downfalls for being a renter versus a homeowner is that, yes, it costs more money to be a homeowner, right? But the benefit is the equity. So think about it this way. I bought my car. Cars cost what, $30,000, $40,000 now?
Yeah.
Right? My payment's going to be what, $500-600, and now the new loan is around 6 years long because cars cost that much more money.
Yes.
As soon as I drive that car out, my car is no longer worth 30,000-40,000, right? It's already depreciating in its value, but yet I still got to make this payment.
Correct.
The home values that we have now, the market we're in now, you purchase a home today, let's just go easy, 400,000, right? Equity is about what? 4 or 5%, Mike?
Yeah, on average, yeah.
Being conservative. So that means if you wait another year because you're waiting for the market to crash, that $400,000 house could now cost you up to $420,000. So now the house is costing you more money. So with interest rates as low as they are, because historically, even though last year rates were in the 4s, that was still historically low. And now it's in the 3s, right? Depending on what you qualify for, right? So you can get more for your money based on it. So what Mike and I do is we are here to help you transition from renting to owning, right? Because usually you sign up for a 1-year lease. We love to start working with you at the 6-month part, because in 6 months we can help you with your budget, your credit, right? Find out what you need to do now so that when you are ready, whether it's 6 months from now, a year from now, Mike and I don't care, right? We're here to help you plan it, because our goal is to have more people own property, right? Because that's how you really build wealth.
I agree.
And then lastly, let's just talk about waiting for the market to crash. What are your thoughts, and then some statistics maybe on regards to the market crash?
Well, I'm just not seeing that. I'm not seeing any signs that the market is slowing down. For example, we have low inventory. Just to speak to it, here in Chula Vista alone, the average time a home spends on the market is 19 days. Wow. The median time is 9 days. So homes are not really remaining on the market long. And coupled with it being low inventory levels, homes are selling fast. So I don't see the market crashing when there's a high demand for housing, and here, at least here in San Diego County. Now, other counties I can't speak to, but San Diego, I do not see a market crash anytime in the near future.
And then on the financial end of it, most people now, unlike the crash in 2008, people have equity in their home. So what does that mean? Well, I bought a house 5 years ago for $400,000. I'll just be conservative. I just pulled up some numbers with Mike just a little while ago. And from $400,000, that house now is worth $569,000. That's $169,000 worth of equity in a home. So you can only get that if you become a homeowner. So Mike, I think we've answered all of the 3 questions that most of your clients have asked you. And if they have any questions or concern, Mike, how can they reach you?
They can reach me at my cell phone at 619-632-7259, or you can email me at mharris357@gmail.com.
Well, great. Thank you so much. Stay safe, and we'll talk to you soon.
Thank you.
Later, Mike.